Obviously, it's been a rough session for semiconductors, which is something we don't say often, right? Not in 2024. Of course, anytime we say that, that means really it's been a rough session for artificial intelligence stocks. And that's been a little bit now for a couple of weeks. Now, of course, today, the big downdraft sparked by scuttlebutt, the Biden administration ready to take extreme measures to ensure that China doesn't obtain these high-end computer chips. But even before today, this AI trade was waning a little bit, right? The big story has been a rotation into things like small caps. So the bigger question now, is the hype already over? Well, let's bring in IO Fund lead tech analyst Beth Kindig. Beth, you've been here before. Is the hype over, right? In fact, I've got an article. I'm going to put a headline from an article last year in InfoWorld. It was titled, "When a Generative AI Hype Fades," right? Now, here's the thing. We've been told that this is the first or second inning of AI. Why so many people already jumping off the bandwagon?
Those are great questions. I am not jumping off the bandwagon. What I would say is that many fund managers were confused about AI in 2023, were confused in 2024. They're not realizing that what we have in our hands is an AI economy, not an AI bubble. This is evidenced by the real revenue, the real growth, the real profits. This is an AI economy because of those reasons, and we are looking to buy on this dip.
But right now it's an AI economy, but the picks and shovels part of it is that it's getting all the attention and where all the money is being generated. Does that mean you're still hot on NVIDIA?
I am very hot on NVIDIA. Right now, we're estimating a minimum of 30% upside. Analyst consensus for next year is $160 billion in the data center. We are tracking now $220 billion. There's your 30%. We have Blackwell coming at the end of this year. Hopper brought us here. Blackwell is going to exceed Hopper sales. This company is not stopping. At 30% is minimum, Charles. We could see up to 100% move over the next 6 to 8 quarters. And this is because there is plenty of room in the PE ratio. It goes back to those real profits that we discussed around the AI economy. This company is valued low because it has grown 500 to 600% on the bottom line. That valuation is too low for this run to be over.
Yeah, we're not used to the E leading the way when they go parabolic like that. So we got these data centers, and I read where you say this whole thing now will cause a power demand. I want to make sure I got the number right. To increase 8,000%. And we've been hearing about this, and a lot of folks have pivoted their portfolio to that. But a lot of these so-called power plays have struggled of late. So what's the timeline, right? Because I know I've been around for a long time. There's the hype, which, these stocks go crazy. They go up. All of a sudden, these names don't meet the hype. They come back down. But over time, they eventually do. The hype does come to fruition.
Those are great questions. We have a pretty good idea of timing for AI power consumption because the next generation, again, Blackwell, I've been talking about Blackwell on your show for some time. It's finally going to hit at the end of this year. That's a 300% jump in power consumption over the next few months for these AI data centers. Liquid cooling is going to be necessary because we're crossing over the 1,000 watt mark on power consumption. I know that's a lot of jargon, but AI power consumption will be a leading trend by the time we close this year.
All right. And again, we're out of time, Beth, but I want to mention that I saw where you said you like AMD a lot, maybe as much as NVIDIA. Is that right?
Absolutely. I actually see more gains in AMD. It's a lesser understood story. It's because they have the x86 and the ARM-based PCs. Plus, keep an eye out for Silo AI mentioned on the upcoming earnings call. I'm on the edge of my seat for AMD right now.
Okay, if you're on the edge of your seat, I'm on the edge of mine, and I don't even know why. Beth, thanks a lot.
Thanks, Charles.
So my next guest actually took a poll last month, and he did ask, he says, are we in an AI bubble? Here's an interesting thing. 45.6% say yes, but we're going higher anyway. So let's bring in Deepwater Asset Management co-founder partner Doug Clinton. Doug, this is really amazing. So 46% essentially said it's a bubble, but one thing about bubbles, you never know how far they can go. Almost 10% said yes, and it's about to burst. No, but we're going to get one. 34% no, and we won't get one. 10%. That's an interesting group down to 10%. At some point, there's going to be a bubble, right? Because it's just too much excitement. As Beth just outlined there. What's the right answer?
I think we're not in a bubble yet, and we will get one. So I'm in the 35%.
Right.
And I think the reality is, you ask what inning is it? Is it 1? Is it 2? We think it's probably 3 or 4. But if you put that into context, I still think we have 2, 3, maybe 4 years until we really get to the irrational exuberance phase that every new paradigm shifting technology sort of goes through, and AI is on its way there. I just don't think it's there yet.
So Beth talked about distinguishing between AI bubble and AI economy. I know at some point, for investors, the idea would be to be able to find the companies that use AI best, right, to improve margins and things like that. Once all the picks and shovels have been sold, so to speak, is that part of the 4-inning thing? I mean, the only being in the 3rd inning, are those also part of this baseball analogy?
It is, and I think I'm going to have to steal Beth's terminology. I like this idea of the AI economy. I mean, the first 3 innings that we've gone through so far, it has been about infrastructure build.
Right.
I don't think that's over yet. We're still going to see the mega cap companies spending hundreds of billions of dollars a year, building out the servers they need, building out the technology they need, and investing in the models that they're creating. When we get to the later innings, to the point of your question, I think that's when we ultimately see some of that economic benefit, because that's been sort of the question that people have posed if they don't believe in AI. They say, where are all these great benefits that we're hearing about? I think we might see that a few years down the line, so we need to be patient for that part of the game.
All right, so there's from day one, it's been comparisons, NVIDIA, Cisco. One I saw recently, I will share the chart on the screen, is in 2000, Cisco was 5.5% of GDP. NVIDIA has been as high as almost 12% of GDP. Is that a nonsensical way to look at it?
I think, well, it's funny, these charts, right? You can make numbers say anything you want.
Yeah, if you're bearish, you'll find a way to express it in the chart.
Exactly, and I think the simple answer for the Cisco versus NVIDIA comparison is this. Look at their earnings multiples on a forward basis. NVIDIA trades low 30s. Cisco at its peak was about 100. So we're not there. I mean, NVIDIA, again, they are generating a ton of revenue. They've added 200% to their top line base. The stock is up 200% a year. So it's followed the fundamentals. If
China is X'd out of this, though, how much does that change the upside potential for some of these companies?
There have already been restrictions on a lot of the higher-end chips, right? From NVIDIA and other players. There have been restrictions on ASML, another technology provider, right, that provides these
which is, by the way, the hardest hit today, the Dutch tool maker, right?
That's what they're looking at, right? And so I think on the margin, a lot of the big stuff has already been blocked. Could there still be some more issues, a few percent here or there, from the China issue? I think there could, but a lot of this investment is still coming from the mega cap companies in the U.S. That's what's going to continue to drive the infrastructure.
I got 30 seconds. I'm going to put on the screen 3 stocks that you like here. Taiwan Semi, which has just been a monster. Google or Alphabet. Ciena is a name I've been in and out for at least 2 decades, maybe longer. Ciena, where is this coming from?
Ciena is a little bit of an under-the-radar one, and what they do is they create fiber optic technology, cabling. The telecoms.
Now you're scaring the hell out of me.
Yeah, I know.
Talk about 2000.
Right.
Yeah.
Everything's a throwback. Everything's a remix. But why that's important, though, is you think about these data centers that are running AI applications. You need to network the data centers together, not just the servers in the data center. And I think Ciena's technology is perfectly suited to do that.
All right, folks, you heard it here first. Great stuff.
Thank you.
Between you and Beth, I feel like my IQ went up at least 5 notches. Thanks a lot.
And let's be clear, it's not just rhetoric about the chip sector. It's not just they took all of our chip business away. It's also Taiwan should pay for their defense. We, the U.S. taxpayers, should not. And so there's an added layer of complication here in terms of the rhetoric, that could be facing some of these chip makers.
I think you're going to hear that for the next 4 years. I don't think that's going away in any regard. I'm just trying to...
So are you saying to stay with chips or to sell chips?
You want to stay with chips
sounds
because...
like you're making the case
you want to stay with chips because that is where you're getting the fundamental tailwinds. That's where you're getting the earnings growth. Mm-hmm. But you also want to set an expectation for yourself.
Right.
Can they continue to advance to the degree that they have? Can we continue to be void of a significant correction in the market? The question of obviously that answer is no. So I'm not surprised. I wouldn't be surprised to see the NASDAQ deteriorate further. Positioning and sentiment is rather full. We have extreme bullishness in both cases. So a correction, given where we are seasonally, I wouldn't be surprised about that at all. But it doesn't wash away the strong fundamentals surrounding the industry.
Josh Brown, you own NVIDIA. What is your take on this situation? And also put in the context to today's action in terms of seeing Intel, the national chip maker, up 2.25% in the midst of this chip smackdown.
Well, let's go backwards. In the case of Intel, very clearly they have pursued government contracts, government stimulus, state level concessions. They want to become a TSM-like foundry, but within the Western Hemisphere. And more specifically, they want to go to areas in the United States where they think they can attract talent. It's going to be harder than, just doing press conferences and cutting ribbons. It's really, really easy in Taiwan to recruit the best and the brightest to want to spend their career, essentially their lives, in a clean room, wearing all white head to toe, working on nanoscale, almost molecular level physics. That's harder to find people that want to do that, top talent that wants to do that in the United States. So it's not going to be that easy for Intel to take meaningful share back from Taiwan Semi, regardless of how many billions of dollars the taxpayer is going to help them do that. But I understand the rally. The bigger picture point that I want to make here is, and I said this during the first Trump presidency, and it was good advice, and I'll say it again now: do not, on a daily basis, change your asset allocation based on tweets. For God's sake, did we learn nothing? All of the quote-unquote Trump trade industries underperformed from 2016 through 2020. All of the companies that were allegedly in Trump's target sites were the best performing. A lot of people forget this because in recent years, TikTok has been the enemy. There was a time where Facebook was the enemy. And if you had sold out of Meta because you didn't like what Trump was tweeting about Zuckerberg, or Facebook manipulating the election in favor of Democrats, or blah, 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 you missed one of the greatest all-time runs for any stock of all time. Same thing with electric vehicles. Allegedly, Trump was hostile toward electric vehicles. If you sold Tesla because of that, you missed out on one of the greatest winners of all time. So please, don't play this game. Don't start pairing Taiwan exposure because of an article that appeared in Bloomberg. The number one thing to remember about Trump's economic policy is that it will be shaped by whomever is the last person he speaks with on a day-to-day basis, and on an intermediate-term basis, it will be shaped by who is contributing money to his super PACs and his campaigns. And when you understand that, you understand that the risk of him, quote-unquote, going after this FANG stock or that cryptocurrency, it's very, very de minimis, and it should not be the way you behave over the next couple of years. Get that out of your vocabulary. Yeah. It's not going to work.
Point taken regarding what actually comes true and becomes policy out of all this rhetoric. There's a reason why it's called political wins. But Bryn, you're seeing a reason to reposition what you have in NVIDIA. You've been selling calls. What prompted that? When did you start doing that?
Yeah, when just a few weeks ago, when the stock was around 130, I sold the October 150 strikes and got right around $10. So for about two and a half months, there's huge call premium. And I think that we've all seen 2023, 2024 have just been blockbuster years for NVIDIA. And so I felt with half the position, I'm going to sell calls. I didn't think it was actually going to go to 150 by October. If it does, I'm happy to have it called away. I had a wonderful return on that part. But I think within these names, especially the Teslas, the NVIDIAs that actually have more volatility, this is a wonderful time to take and have that money work for you while the stocks are going down or sideways, is because there is such huge call premium, not in an Apple or a Microsoft per se, but I think that's just a smart strategy, especially when you have these new headwinds potentially around, what the rest of the desk has already been talking about.
All right, this is a very important update on NVIDIA, so let's first cover how we got to this point and then go from there. Around June 20th and 21st, I told you I was expecting softening in NVIDIA's price and choppy price action, possibly lasting into mid to late July. My reasoning was simple. We didn't have any events between the shareholder meeting on June 26th and NVIDIA's next earnings report in August. And mid to late July would be the point in the cycle in between earnings reports when NVIDIA typically reaches a relative low as market participants temporarily shift their attention away from NVIDIA to focus on the rest of the market. And that is exactly what we have seen as the rotation out of mega-cap tech stocks into small-cap stocks started last week. As you can see, the Russell 2000 small small cap index has been absolutely running the past few days starting last Thursday. Then yesterday I told you that NVIDIA was breaking below this support trend line. Yesterday we did not know yet if it would be a true break of trend or a fake out. Now we know that it was a true break of trend to the downside. I told you yesterday that if we broke that trend line, we would shortly thereafter enter this demand zone. And that proved true this morning in pre-market and early in today's trading session. So what happened since yesterday's video? Two things. First, Bloomberg reported that former President Trump was questioning if the U.S. should even defend Taiwan, saying that Taiwan took the United States chip business and saying that Taiwan should pay the U.S. for protection. Additionally, Biden is reportedly considering the implementation of export controls that would limit exports of chips to China. Both of these events are bearish news for semiconductors. So yesterday we had a bearish technical setup forming an NVIDIA stock, and then the news from both Trump and Biden pushed NVIDIA over the edge, so to speak. At the time of this recording, we appear to have broken below the demand zone that formed back on July 3rd. Remember, as I said in yesterday's video, supply and demand zones are areas where a supply and demand imbalance has occurred in the past. These zones are areas of interest where a reversal is more likely to occur. However, I do not buy or sell just because price moves into these zones. Rather, I pay attention to how price action and volume react to these zones, and then I use that information to make better trading decisions. So NVIDIA breaking out of this demand zone to the downside is bearish. Additionally, on smaller time frames, we formed a new supply zone inside of demand, which is also short-term bearish. Hear me well when I say this. I do not know what the future holds, and I could be completely wrong, so do not make any financial decisions based on what I say or do. With that being said, I would not be surprised to see NVIDIA trend lower. At the same time, NVIDIA is very oversold on multiple time frames after today's trading, and so even if the stock trades lower, you could still see some technical bounces along the way. So put simply, I'm expecting volatility in the days ahead. Personally, if I were looking for an entry on NVIDIA, I would consider entering in the range of $98 and $112 per share, and the closer to 98 the better. Will we see a dip like that? I don't know. Time will tell. Next up, we have Taiwan Semiconductors earnings scheduled to be released tomorrow morning before market open. So that is what I am focusing on right now when it comes to NVIDIA. NVIDIA designs chips, but they rely on other companies, mainly TSMC, to actually manufacture those chips. I did some digging through TSMC's monthly revenue reports on their investor relations website, and based on those monthly revenue reports from April, May, and June, I estimate TSMC should report net revenue somewhere in the range of $20.67 billion US. That would be above the estimated $20 billion in revenue according to Business Insider. So for now, I'm not too concerned about TSMC's actual earnings for Q2. Based on their monthly revenue reports, they are likely to beat on revenue expectations. What I'm more interested to see is TSMC's forward-looking guidance. Expectations are just so extremely high right now, and some companies, like Micron recently, have reported great results but offered softer than expected forward-looking guidance. And as a result of softer guidance, their stock got hammered even after they reported great earnings. So I think the street knows what to expect regarding TSMC's actual earnings, and now the focus shifts to TSMC's forward-looking guidance. TSMC's forward-looking guidance will be especially important to watch as it relates to NVIDIA and the industry as a whole. With all of that said, I'm curious to know your thoughts on NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.